Hello.
Hello.
Hi, Patrick.
Hi, Karina.
Nice to see you tonight.
Nice to see you too.
That's pretty cool. Our very first Selma webinar.
Exactly. Yeah, I'm pretty excited.
Me too. I can see there are already quite a couple of people here. Let's chit chat for another minute. Wait until some more have arrived, and then we can officially kick off everything.
Yes.
Perfect.
There are already first people saying hello in our chat. Hello there.
Hello.
We seeing you waving.
Yes.
Yes.
That is lovely. Really exciting. Yeah, so for everyone, this is actually really live. We've put this together, I think, in a record time because we really wanted to address some of the questions that are around because of the crisis.
I see Ollie is just writing from his home office. Hello, Ollie. We're also in our home offices, actually. So already quite a while, and now we thought it's a good way to still connect with you guys and tell you some insights about what is happening in the markets, what is happening with Selma, but a lot more about that in a few minutes, right?
Yes. That is very true. Well, I think, whoa, we are well above 100 now. So maybe we can actually start. What do you say, Patrick? Are you ready?
Yeah, sure. I think people can still tune in later. So
yes, we're gonna start with the setup at first anyway, and then dive into the interesting, juicy topics. So that means let's get started for real. Welcome everyone again to Selma's very first and live webinar.
I see some of you already found the commenting chat on the site saying hi to us, and you can also gonna use that later, right? I think you're gonna explain.
Exactly. I'm gonna go through this just now so everyone knows how this works. Basically, we're touching upon this topic, investing during a market meltdown, because the coronavirus crisis has been all around us. And as your digital financial advisor, we really thought we should also shed some light on the ongoing happenings for you and tell you what to pay attention to when it comes to investing. So for everyone who doesn't know me, my name is Karina. I'm a product marketer at Selma Finance, and I'm gonna lead you through today's webinar. And before I officially introduce you to our co-host, Patrick, of today's session, I'm gonna go through some of the technicalities that we need to consider. The webinar is gonna last around 1 hour. First, we're going through some of the prepared agenda topics, but we have also blocked time to answer live questions, which we will choose then on the spot. And as we pointed out, a lot of you have already found the chat. It's on the right side of the screen. The messages you post cannot be seen by the others. At the moment, we can see them as moderators. And once we get to the point where we're going to answer questions, we'll go through them and try to answer as many as possible. But we've already planned to probably put together a blog post afterwards where we answer the ones we don't get to in case it goes too long in written form. We hope that's okay. And of course, we're also going to send out a recording of this webinar to everyone who's attending or registered, so you can revisit questions you found especially interesting or jokes Patrick made that were very entertaining. Speaking of entertaining, you should also see a poll, like a question and some answers on the right side of your screen if you click on the poll section. And there you can tell us if you're already a Selma client, simply interested in getting invested and getting started with invested, or if you already have a test account and are still considering, because we'd also love to learn more about you. But yes, now it's time to end my monologue and actually move on to introduce you to my co-host of tonight's session, because he's our expert and I'm gonna quiz him for you about markets and investment strategies. So Patrick is Selma's co-founder and CEO. He has worked in finance, I think, even before Selma, almost your entire life, right?
Yeah, almost, yes.
Almost starting grammar school. He's also a financial analyst and responsible for Selma's investment strategy. So he's the exactly right person to ask all the questions to tonight. Thank you for joining this session.
Thank
it's going
you.
to be a fun hour.
Very excited to be here.
You're excited? Yes, that sounds great. But now I'm actually going to hand it over for real to you because we're going to dive into all the topics. Patrick, could you walk us through what we're going to talk through today?
Yes.
And maybe what you're excited about most?
Yes, of course.
Let's get started.
So I saw that we have a few people here too that haven't started with Selma yet or that don't know Selma very well. So I think I'm going to start to say a few words about what Selma is, what we do, what service we provide. No fear, it's not going to take too long. And then we're going to dive right into the markets to discuss what the hell is happening right now. You saw the title of this webinar was a market meltdown. That's what we have seen in the recent weeks. Then we also have seen a little bit of stabilization in the like right now, last week, this week. Going to discuss a little bit about that. We also going to discuss, okay, what does this mean now? What is our outlook for the future? And then we're going to talk about a few tips for Selma clients, but also for people that haven't started with Selma yet. And then in the end, as you already said, Karina, we're going to have time for questions. So if there is a question showing up while I have my monologue or while I talk, feel free to already post that question in the chat. And in the end, we're going to pick some of those questions to be answered. Yes.
That is perfect. Thank you. And like you said, for some, there might be a big question mark behind Selma still. And in order to get this out of the way and explain a bit more about how investing with Selma works throughout this webinar, like you said, could you talk a little bit about our dear Selma and what she does for you?
Of course. So Selma is a digital financial assistant. You can see Selma here talking on this slide. Selma is also a very clever financial robot that helps our clients to do the right thing with their money. On Selma, we provide managing your investments. We also provide pension accounts, that means Pillar 3A. And when you use Selma, Selma is looking at your big financial picture. So what's happening is when you start with Selma, you're having a chat with her. You feed her some information about your finances. And then based on that, Selma is developing a personalized plan for you, looking at should you even invest, how much should you invest, should you do that like at once or should you do that stepwise, what kind of risk is right for you. And then when you actually have opened an account with us, we're looking at this entire financial picture when something in your life changes. Let's say you buy a house or you buy other investments elsewhere. Selma is looking at that, and also Selma is of course looking what's happening at the markets. And I think that's what we're gonna talk most about today. So if there are shifts in the markets, especially if there are bigger shifts in the market, Selma is looking at that and is checking if there is things that you need to adapt in your profile or in your investments.
Yes, that was a nice spoiler to one of the most interesting questions, I think, about how someone manages your money. Not to spoil too much. That's perfect. Thank you, Patrick. Do you want to add anything about Selma, or can we move on?
Yeah, maybe like we're a digital service, but we also have humans behind Selma, so like us. And you can also, while the service is digitally, you can always also reach to us, to our financial experts, to our team, if you have questions setting up your financial situation, if you feel Selma is not getting things right, or and so on. If you have very specific things that you want us to look at, feel free to also talk to the humans behind Selma.
That is a very good point. Thank you. Perfect. So soon we're gonna dive into the first topic, which is what the hell is going on the markets. But before it, to keep you involved and entertained, let's have a look at the next question and poll we are sharing right here on the screen, because we'd like to get to know you even better throughout the course of this webinar. So in just a moment, you should see the next poll where you can let us know what your level of expertise in terms of investing is at the moment. We'd really like to find out how you would classify yourself. Wow, that's exciting. Quick answers. Wonderful. Anyway, Patrick, I'm going to hand it over back to you again.
Yes.
Because as we all know, and that's probably why most of us are here, Corona crisis has made markets go down like crazy. Things have happened that had never happened before. And so maybe to start it off, could you give us like a little overview in a couple of steps of what happened so far?
Yes, so I've put a few points together. I think we don't really have to explain a lot what the problem is, because maybe a lot of us are sitting in our home offices. Things are very different than they used to be when we think like a month back, or when we think even further back, and when we probably thought that the coronavirus that we have now is probably just going to be a like sole Chinese problem. We now saw this virus spreading, unfortunately, to other parts of the world. First Italy, but then now almost in all Middle Europe. And we see the consequences in some of the strongest economies in Europe. So we see consequences in Italy, in Germany, in France, in Spain, Switzerland, of course. And that has moved the governments to take, I think, like, also when you look at the history, to take measures that we haven't seen since World War II. So quite drastic situations, and we've seen those measures especially hitting both sides of the economy. So we've seen that in demand. Demand means is what we buy. So we have seen entire sectors locked down and then closed. So there is certain companies that can't really sell their products. But there is a second part about that, that is that part of those companies, they can't even produce those products anymore because they're lacking resources. And resources, that is the people that work for them. So they have people that can't leave their houses, can't go to their job, can't do their jobs normally, so they can't produce. And what also had a quite strong effect is that we see how intertwined all those productions are nowadays. So we have some sectors standing still because of the effects of the closing down in China, where we already see a recovery, where plants start to produce again, but we can still feel the effects that the products that have not been produced 2 months ago in China, they are now missing in other places of the world that would need them to have their facilities running. What this means then is that there is a fear of a recession. Recession means the economy is shrinking instead of growing as it would do normally. And also that the companies, they're making less profits. So it's quite obvious if you sell less, you're also making less profits. You're probably even making losses. And what defines the value of a company is, in the end, how much profit a company makes. So as an investor, you're paying, when you invest into a company, you're paying for the profits that this company is going to make in the future, because they're your profits, because you're an owner of that company. And if those profits are less, that means this company is worth less, and that's basically the reason why stock markets are going down.
And pretty much all the jumps that happen quickly also result from everything going up and down and new things happening so fast, right?
Yeah, exactly. The stock market reacts quite quickly to news. So we also going to talk a little bit about that when we talk about what is happening now. The stock market is always looking into the future. So about things that can affect those companies' profits. Right. So when we have a situation when we see, okay, we might find a vaccine against this virus, this situation might be over quicker. That leads that stock markets go up. If we have, as we have seen last week, massive state programs where the US has said that they're going to be putting $2 trillion into keeping the economy alive. That's 2,000 billions. It's a massive amount of money, and is a signal that governments are trying to keep the whole economy alive, or to at least have money available to restart it when the situation is under control. And that means that companies could be faster back to their usual level of profits, which makes them more worth, which makes stock markets going up.
Nice. That's great to talk about all the different relations between the different sectors. I would like to jump to the interesting topic of what the situation is now.
Yes.
If that works for you, because
of course,
I think there we can take it further to the questions as well.
Yes.
So the first question there is, I think you started talking about it. How quickly will it be over? Everyone is asking themselves the same question.
Yeah.
Is it finally happening?
Yeah, everybody, and especially the stock market, right?
Yes.
Because there is nothing that the stock markets hate more than uncertainty. And also the time that this takes defines the time for recovery. I think it's comparable when you're ill yourself. So if you're ill, if you're very ill, you need a longer time to recover. And there, the patient that is probably like most at risk now when we look at the economies, or where we most insecure what's going to happen, is the US, which is one of the largest economies in the world, where we haven't really seen that the situation is coming under control. So when you look at China, there, at least when you look at the official figures, that the situation is pretty much over. When you look at Central Europe, you see now in the figures, you start seeing that the situation is gonna get under control. At least in Italy, also in Switzerland, also early signs in other countries. Whereas in the US, it's still very difficult to judge, and that is going to define how long this takes until we have until we can go back to running the economies normally. And the longer it takes, as more it will cost, as more it will hurt, and as longer it will take to recover for the stock markets.
Yeah. So what you're saying is also that even though like people have lost a lot of money already, or like the economies have come down, or stock markets definitely came down, it's not really sure if there is a bottom or where the bottom is, because there are so many uncertainties still open, even though we saw some recoveries already in the last 1 or 2 years.
Yeah, there is certain things we can look at. So what is good for the stock market, I talked about that before, is that after we had pretty much a total mess in the first weeks, we now start having to have scenarios also for the US, even more for the economies in Middle Europe. So we know, or the stock market knows, what the worst case is. So some of those scenarios start to be priced into the prices that we see at the markets. We just had in recent days by KfW, which is a large German structural bank. We had the worst scenarios for the German economy. They were that it loses 10 to 15% in the second quarter, which is massive. It's more than in the financial crisis, but it's kind of good for the market that those worst case scenarios are starting to be out. So as soon as people are more aware of them, they can like take them into their financial decisions, because stock markets they think ahead. Mm-hmm. Also, what we see when we look at how the markets are valued over the longer term, we see that by this drop of almost 30% in most of the markets, we see a lot of the markets that are now at a much more fair level than they were when we look at them in December. But of course, the uncertainty that we have is still very high. We don't know how long exactly it will take. And also, we are not very sure about how fast the recovery can happen. Because mm-hmm. some areas, when you, let's say you sell shoes, when the crisis is over, you can buy more shoes. But if you are a hairdresser, like even though I'd had like 3 times the hair I have now, I could only go to the hairdresser once. Meaning there is a couple of those effects that cannot be recovered that quickly. Same in the event industry. If an event is gone, you can't regain some of the economy's loss that has been disappearing now.
Yeah, that's what you said. Right? The longer it takes, we can't make up the time. The longer the economy needs to recover. I think these are very, very good examples to make it tangible.
Sorry.
Yes. Go ahead.
But what's going to be quite interesting now is also that when March is over, in 2 weeks from now, companies start reporting their quarterly profits, mm-hmm. and we're going to have more information about what they've lost now. So we are getting more from prediction, more to facts, which is good for the stock markets, because then they can base their prices more on facts than on feelings.
That's perfect. My question was, what I wanted to circle back to is that when we can't really, like when this takes longer and the economy needs to recover longer, what I like, there is a parallel, right? We as individuals, we can do something to help coronavirus from spreading. A lot about this is as individuals to stay at home, stay healthy, work together quicker to make this like end quicker. From an economical standpoint, is there also something we can do as individuals? I saw that some little businesses start offering gift cards to like buy.
And that's also, I think, what people are betting on. Like humanity's always become creative mm-hmm. in a crisis, and they started to adapt and having new ways to work, as we have now. Mm-hmm. New ways how to sell products. We've seen a lot of initiatives where especially small businesses or, as you said, starting to sell gift cards, having things that you can consume later that mm-hmm. you can buy now. And there, I think, like, I would also suggest that we take use of those, also to show our trust to those kind of businesses. We can probably even, like, there is quite a few initiatives throughout Switzerland, at least, that we know of. We can probably also share some of those for you to know that's to know how to support your local economy.
I've read about, I think also a startup that lets you order local produce from farmers as well. So instead of hamstering, if that's an English word, from supermarkets, it might be smart to actually really buy what you need, if it's a lot, from local businesses as well. Okay, great. Well, the last point on this slide is a very positive one, though.
Yes,
so,
exactly. Yeah.
Even though everything is horrible and uncertainty is high, every crisis has an end. Is there something you want to say about that?
No, I just want to say that it's going to be true. That also this crisis will have an end. It's just that we are at the moment, we are still in it, and we are not at the end yet. And we likely gonna have also throughout summer, we still gonna see effects of this. So we likely also at the stock market, we expect that we're gonna see quite a lot of like bouncing up and down over the next couple of months, while new information, new facts come in, and they are factored into the prices at the stock markets. But as we said before, also in the financial crisis, also in other crises, every crisis had an end, and so it might also be an opportunity. But I think we're going to talk about this, if this is now like, what should you do now? Should you sell, or should you buy, or should you do nothing? I think we're going to talk about that next, right?
Yes, we could actually move on to it, because right now we talked about the facts and what's happening right now, but I guess a lot of you are also here to find out what you personally should be doing. And the first question, if you're already investing your money, Patrick, should I sell?
Yes, that's not, the answer is not yes. It's yes, I'm gonna answer this now. For most people, the answer is gonna be no. And it depends very much if you need this money. So if you're now in a situation where you think, okay, like I'm very low on cash on my bank account. I have things that I need to buy in the short run, and the short run pretty much means 3 years, or everything that is under 3 years at the stock markets. If you need money, you might want to at least manage the risk in your investments, right? So that when you need that money, to lower the chance that we're at the absolute lowest point in time, and you need to sell at that specific point. We've put up this graphic, and the reason why it isn't good to sell is not only that as we said, the stock markets might drop like a bit lower in the next couple of weeks, but the problem about selling is that also you need to be able to buy again, and buying, because the stock market think ahead, you then have to be buying in the like most grim time, right? So you have to buy in a time where you think, okay, things look really grim now. I sold, and as soon the prices are back up higher than when you have sold, then it's going to be emotionally very hard to get back into the markets, and especially over the long run. What you're going to earn, like if you are, I don't know, 20, 30, 40, maybe even 50 now, and you have like 10 years plus until you're going to use the majority of your money, it's not good to leave the markets completely. So we're going to talk about what you can do if you can't sleep at night with your investment. But for most people, it's not a good idea to sell. It's maybe a good idea to close your eyes for a little while, but for most people, if you don't need the money out of your investments, it's not a good, it's not a wise point in time to sell.
Thank you. That was a very good answer to the question, I think. Do you want to move on to the opposite question?
Yes, exactly. And interestingly, we have the same graph, right?
Mm-hmm.
So now the question is, should I buy? And the answer is the same but opposite. If you want to buy to make money in the next 6 months, you shouldn't do it. So if you want to invest for the short run, then it's not that the markets are too nervous, too risky for that at the moment. But when we look at the valuations of the market, how expensive they are over the long run, and as I said, we're already like 30% cheaper than we've been by the end of the year. And we see prices start to normalize, they start to be fair. And when you have a horizon that goes over these 3 years, ideally even over 5 years, over 10 years, then this is an opportunity to buy. We're gonna talk about how you could do that. We wouldn't advise you if you have like to put your entire wealth now at once into the stock market, but there is actually quite clever strategies how you can also buy over time, so you don't have the risk of a specific point while markets are so nervous.
Yes, what I'd like to mention here is that, of course, our recovery graph for the future looks very logical, right? You're hitting rock bottom soon in this graph and then recovering quickly. We don't know. This could go on the bottom line for a long time, but it could also spike up without that many up and downs very quickly. And that's, I think, also to sum up what you said, we never know. And that's why it's smart to probably use some strategies to invest over time, but without the panic.
Yep, exactly. But I mean, in the long term, if we move back to a normal state of the economics, the companies, they will produce profits, and in a normal state of the economy, they're not producing losses. Otherwise, they're getting bankrupt at some time. And those profits, they accumulate over time, and that's what makes the stock markets go up over time. So it is a very clever idea to be invested into companies over the long run instead of just keeping the money on an account. But it needs some tolerance for some roller coasters.
Yeah, so probably the next few months, maybe years, are still impacted quite heavily by these uncertainties and ups and downs.
Yeah, exactly. Especially when we see how as soon we're gonna have clarity how long this crisis takes, I think we're gonna see the stabilization of the markets. But at the moment, we don't know exactly yet when this is gonna be.
Yeah, that's what I found a very interesting comparison to the crisis 2008, 2009. Because it's hard to compare it, right? If it would be easy, that would be great for all our analysts out there. But we never had a health crisis like this, like a pandemic in a globalized world that just hasn't been there. And
yeah, it's also a bit different because last time we mainly had a crisis in the financial space, and a lot of the states maybe came in like helping a little bit too late. And this time we have a crisis in the real producing economy.
Yep.
While on the financial side, the markets are flooded with money to keep the whole financial space up. So we have less of a worry there. The worry is actually more on the production and in the real economy and how fast we can get that back up.
I see. Thank you. Well, we already started teasing it a little bit. Next up, we wanted to go through some tips. I know you prepared a couple of tips for our clients. Would you like to move on?
Yes.
And go there.
Here, tips for clients, exactly.
Tips for clients. Yes, we're first going to go just quickly into the tips for existing Selma clients. We're going to reference a lot of things that Selma does. So if you have questions as a not yet Selma client, you can always message us afterwards or ask these questions in the chat right here. And afterwards, we're going to also look into tips that you need for getting started just now.
Yes, and I think like you're probably not gonna be surprised about those tips when you are a Selma client, because those are things that we put in quite a lot of work into, also in our setup and also in the communication. So one of the things that Selma does for you is to make a plan for you that works for you long term, and to look at your cash buffer. That's also something that we're checking when people start to invest with us, that you should have a high enough cash buffer. Maybe to explain the cash buffer briefly, that's money you have on your bank account, and that is like a buffer for bad times. So if you have invoices that are coming if you, in the worst case, lose your job, that you don't need to sell your investments right away. And what we suggest there is that this should be 3 to 6 months of monthly expenses, so that you could, without getting a salary, with like no income, that you could live out your cash for 3 to 6 months. And that makes you stomach a little more when the markets are moving. Mm-hmm. So if there is some surprise coming in, you don't have to get to your investments and sell them in the worst moment.
Yeah, so it's what you said, 3 to 6 months of our suggestions of monthly expenses that you should keep. But most importantly, it's also what you feel comfortable with having always accessible on your cash account.
Yeah, it's a bit personal also, yes. Yeah. So if you feel you're more comfortable having more, then of course that makes sense. Makes sense for you. It's also that the cash is part of the part that is safe, right? It's not going to move up and down. So it's also a little bit driven by how much risk you're willing to take with your investments. So if you don't want to take much risk, it makes sense to have a larger amount of your entire wealth in cash.
Okay.
Then the second one is stick to your plan. What quite a lot of Selma customers do is they invest regularly. So meaning they put something from their salary into their Selma investment account every month. And what happens with them now is that you buy at different prices. So every month now you started buying cheaper. And when you look at all those moments that you bought some for more expensive last year, you bought some for cheaper this year, and you're gonna buy some in a couple of months from now, where we don't know yet if it's going to be cheaper or more expensive. But all of this gives you an average price that you have. So you don't have to be that concerned about the movements in the price.
And the good thing of making a plan is usually also to not get distracted by your emotions, right? Panic usually leads to selling, and we learned that selling at the point when the markets are falling might end up with not investing again when they go up again.
Yeah, but exactly. We say the worst advisors of an investor are fear and greed. So while we've maybe been more on the greed side in the last couple of years, we might be more on the fear side now, and a plan that you can stick to helps you with that, so that you exactly are not driven by those emotions. Another thing that is not emotional is the next point. So you can actually look at the valuation of the markets. That what Selma does when Selma invests for you. So we do look at how expensive or how cheap the different markets currently are. And if they're too expensive, we're investing less into them. If they're cheaper, we're investing more into them. And what this meant now before the crisis is that we invested less in certain markets. And now when prices came down, we started investing into those markets again, because they look much fairer now. Maybe we can briefly talk about the strawberry example.
That would be really nice. Just wanted to ask for that.
You're
So
not
beautiful.
tired about the strawberry example yet.
Please go ahead.
Yeah. So how this goes quite easily is if you have a kilo of strawberries, and in average a kilo of strawberries has a market price of 4 Swiss francs. You know, this is the normal price of those strawberries. And if you now go to the market and the strawberries cost 8.50, you know that they're quite expensive at the moment, so you buy less of them. And if you now go to the market a year later and you see the strawberries, they cost 2.50, you know that they are cheap. So you can basically do the same with the financial markets by comparing them to what they cost in the average, because the prices always tend to return to that average. And that's the systematic what Selma does when we look at the financial markets. We look at how cheap or how expensive prices are, and then we buy less or more. Except that we don't buy strawberries, we buy companies.
Hopefully not. Yes. That's thank you for the explanation of valuations. Yes, we also preach this in a lot of blog posts. You might have seen it, but I think the strawberry example is always the easiest to listen to.
Yeah, of course, we're looking at the financial, like how the financials, especially the profits of the companies, develop over time, and how much you pay for those companies based on profits. That's the systematics. So maybe to the last point, if you are a client of Selma and you felt okay, like the changes and how much this moves, that brings me to a state where I have to think a lot about that, and it brings me to a state where I can't sleep at night anymore because I worry, because it's too much of a proportion of my money and it moves too much. What you should do then is you should have a look at your profile at Selma, where you can steer the risk. As I said before, in such a situation, it might be cleverer, instead of selling your investments, to change the risk profile of those investments, to go from things that are more risky more into things that are more safe. And those changes are actually made based on the profile you have at Selma, which should reflect how you react to especially such changes in the market as we have right now.
Perfect. Yes, for everyone not having signed up for Selma, even the investor profile is something that's put together after your initial chat with the Selma bot. So all the questions you answer about your financial life are factored into this profile, but also the questions you answer about how much risk you want to stomach or how much risk you want to take, they also go into this profile. And based on that, Selma puts together your individual investment plan.
Exactly. There is also the ability of a checkup. So if you have a specific individual situation and you want us to look at this, then let us know.
Definitely. Great. Well, let's move on to the tips for new investors.
Yes.
Let's get going here.
Yeah, some of them are actually the same. Interestingly, so also for new investors, and I think the chart that we had before illustrates that quite well. For new investors, it makes sense to start now if you can think long term. We also we already discussed that too. We advise to do that gradually. So if you have, doesn't matter if you have like 10,000 francs to invest or like 100,000, but you shouldn't put everything into the markets at the same time.
Mm-hmm.
And you should make a plan and check the risk, and that's what Selma can help you with. So if you haven't set up your profile with Selma yet, Selma would create a plan for you based on your personal situation. And then there is also, when you've set it up, there is simulations. And those simulations should give you quite a good feeling about the risk that is involved. There are scenarios from the financial crisis, which still was a little bit worse than Corona so far. So it's the worst case scenario that we have in there, but it also looks at the worst movements in the market in the last 3 years, and that gives you some kind of a feeling how much your profile would move if you invest. We've talked about the cash buffer. The cash buffer is a part of your plan too, but we always like to point it out because it's a good thing to think about how much do I want to keep for those unforeseen expenses, and also to make a little bit of a cash planning over the next 2-3 years, because this is money that you probably don't want to risk for an investment in the markets.
So if I plan to buy a car 1 year, 2 years from now, I might not want to invest it, but keep or save up on a savings account or on my account.
Exactly. Yeah.
Because the risk that the markets go down again is way too high.
Yeah, and statistically spoken, as longer your horizon is, as longer you can invest, as lower the chance gets that you lose money in the end. So, and there is a simple example. Basically, you invest today and you sell tomorrow. That's the shortest time frame, or actually the shortest time frame is like you invest now and you sell in 10 minutes. And there it's pure luck, right? And as longer your horizon becomes, as less it's luck, as more it's the strategy and the systematics that the stock markets go up in the long run.
Especially when you look at the world economies, right? When you look at the whole world or global economies.
Yes, yeah, exactly. And I mean, we do shift there based on the valuations of the markets, what I explained before, but also in terms of that all those companies, what I said, are producing profits, and those profits are yours because you're owner of those companies. And the companies that don't produce profits, they will disappear over the long run.
And one quick question about, to sum up, just.
Yes.
So, tips for new investors: should you start now? Yes, if you can think and invest long term.
Exactly.
Can you say again what long term means in terms of stock markets again?
So really long term with a really risky profile that's 10 plus years. So you shouldn't consider anything that is below 3 years. When you go towards 5 years, you can invest, but you shouldn't have the highest risk profile. And then as longer you can go, as higher your risk can be. But we have another point here, and that means prepare emotionally. It is going to move. That's certain. And as I said, the scenarios that we have in there, they give you some indication about how much or what you have to expect in the worst case.
Yeah. So you might actually start investing and the next day see red numbers, even though it's going to move up maybe quickly again and then drop. That's something of an emotional roller coaster. You might still have to prepare yourself if you get started at the moment.
Yeah, I mean, especially now because we see that we have quite big market movements. We've also seen some record at the stock exchanges. We've seen in the last 2 weeks, we've seen records in both directions, like moves up in a day and moves down in a day. And that means that we're still in a quite nervous environment.
Understood. Wonderful. What do you say? Should we move on to our pre-selected questions?
Yes, so that we, let's answer those that we got from our contributor group, so that we still have we are 50 minutes in now, so that means we're still gonna have like also some time for your questions. Also, I think already feel free to put them into the chat.
People have already sent in some questions.
Yes.
Quickly, just to explain the term contributor, Selma has a contributor group, and on open.selma.io, you can find all kinds of information about our open initiatives. We try to be transparent and include our clients and people interested in helping making investing better and more transparent. So in our Selma contributor Facebook group, we asked what people might want to learn in a webinar. And from there, we chose 2 questions for now. And this is the first one. So, Patrick, how does Selma manage my money during a crisis?
Yes. So as I told before, Selma is looking at the market valuations. That means when markets are very expensive or they're getting more expensive, as they did already during last year, so in 2018, 2019, we're investing less into the stock markets, and that's already happening before the crisis if markets are too expensive. Then, of course, we are also looking at the risk profiles. I said it's important that you have a risk profile that matches your risk tolerance properly. That's also something that's happening before a crisis. So that when you go into a crisis, there shouldn't be too much need to manage in terms of selling nervously, like selling and buying very nervously, because usually that creates a lot of costs, and it can lead to quite a nightmare in terms of results. We've seen that at various places. So reacting emotionally in those situations is usually a very bad idea. What Selma does then, and it's something that our clients have seen now or in the last couple of days, is if the prices come back down to a fair level. Now when we look again at our strawberry example, so if we go back to a price that is fair with the money that we haven't fully invested when markets were too expensive, we start investing again.
So if we didn't buy that many expensive strawberries, we now have more money left basically for buy them cheaper.
Exactly.
Nice. Anything else that we might want to mention about this question?
Yeah, I mean, there it's important. I want to point out again, if you feel that the risk is not right and you can't sleep anymore, that's a good reason to look at your profile and to reconsider. Also, when you see, okay, I'm gonna have expenses that are coming up in the next couple of months, years, that's something that is very valuable for us to know, because then we can also reduce your risk gradually over time, so that we are not that dependent on this one day, the day before you need the money.
That makes sense. Great, thank you. That was a wonderful answer. Let's have a look at the second question. We touched upon this a little bit, but so what's really the best way to get started now? What is your advice to new?
So it's very close to what we wrote for new people. So make a plan, look at your risk. Selma can help you with that. Check your cash buffer. Think about investing gradually, especially when the markets are as nervous as they are. And that's the whole mystery. Then you're basically good to go.
And by make a plan, just to repeat it, because it's such an important part, it means you have bigger sum of money, you plan to invest it, but you make a plan on how to regularly feed it into the market or buy new investments, right?
Exactly.
Great. And also because it's been a question in our customer support as well, if you transfer a bigger amount of money to your Selma account, Selma does the stepwise investing, as we call it, but which just means regular investing automatically for you. Can you say like 1 or 2 sentences about that?
Yes, so if you invest a bigger sum, that means we would invest that over time. So what you can do there, if that bigger sum is also still a small part of your wealth, you can let us know and we can invest it at once. What we're also looking at, if somebody already invests regularly, so you're sending us money every month, that means we're investing your initial capital faster.
I see. Well, that's perfect. Thank you. Well, that means we've arrived at the exciting part, our live Q&A session. And this means we're gonna switch to the chat. Bear with us a couple of moments because Patrick and I need to start reading a little bit to figure out.
Yes, I think we have another poll, right? While we're looking at the questions.
Yes, we can actually share the poll. That's a very good idea. So while we are occupied with looking at the questions, we'd like to entertain you by asking what your plans are for after this webinar. Because like we said at the beginning, we want to get to know you way better. So probably let's publish it. Please do share with the rest of the crowd in here what your plan is. We all have, I guess, some shared goals, given that we're in very similar situations. But let's have a look. And also, I think you saw this, our colleague Niklas has been online and chatting with you while we were talking to moderate this a little bit and already bring a bit of structure into all those questions. Okay. So, Patrick, you chose the first one, I think.
Yes, I chose some, yes.
Well, let's get started with one. I can mark it as, so everyone can see it. Let's get started quickly. So this is a bit similar to the one before, but is now a good time to invest in general?
Yes, if you have a long-term horizon, it is. When you look at the market valuations, much fairer now. If you have a couple of years' time, it is a good time to invest.
Perfect. Do you want to choose the next one?
I think I have. Let's see. This one.
Perfect. Hello. Thank you for the webinar so far. You're very welcome. My question is, does Selma automatically reinvest any dividends?
Very short answer, yes. So dividends coming from your investment products, they go to your account, and then Selma will take them into account for building your portfolio. It's basically the same as when you transfer money to your account.
Perfect. Let's take, yes. So next one up, what metric do you look at to see if prices are high or low at the moment?
Yes, we are looking at an indicator called Shiller Cape that measures how the profits are the company profits are in relation to how much you pay for companies. And there you look at how it's called the sustainable profits of the companies are. So you're not just looking what is happening this quarter, but how much profit can a company produce in normal markets, and how much is the value of that company. And then based on that, you look at if you pay more or less for that company at the moment.
Perfect. Let's get some more in. Let's see. Let's go for this one. Is long-term for a 55-year-old the same as for a 35-year-old?
Yeah, in terms of what how you need to look at when you invest, yes. So long term means more than 10 years. It might be a bit different because when you're 55, you should look at your pension planning. Well, this is something you haven't you don't need to do when you're 35, except you're a soccer player maybe. But if you're 55, the pension has a very big impact because it's coming in 10 years from now. So as closer you're getting to 65, you need to do a budget planning and to see if you need to take money out of your wealth to afford your pension. And when this is the case, that makes your investment horizon shorter because you're getting into a situation where you need to take money out of your investments in the next 3 years. And then you need to start lowering your risk. But in terms of if it's good to invest into the stock markets, the basic rule is 10 years plus is fine to invest in risky investments.
Thank you. Okay, we are approaching the end of our webinar, but let's get one or two more in. Which one would you like, Patrick?
This one.
Yes. So we have this question about our clients at Selma. What
Yes.
is the average investment amount of your customers?
Yeah, so I can maybe start by answering. The minimum investment amount is 2,000 Swiss francs to start with. And the reason for that is that we can spread your investments into different investment products so that we don't have like all eggs in one basket, as you say. The average amount is, I think it's around 15,000 francs at the moment. And the highest amount that is invested with Selma is several hundred thousands.
Thank you. Okay, one last one. This is fun. Let's go. Okay. One more question about the investment products used at Selma. Do you invest in single stocks and bonds or indices, etc.?
We invest in indices. So the products we're using are ETFs. They invest very broadly into entire markets. Also, the measurements, when we measure if a market is cheap or expensive, that happens on a basis of an entire market. And what this means in terms of a risk is that you never have the risk of a single company in your portfolio. So if a single company doesn't do well and they go bankrupt, that's something you will almost not feel because your investments are always spread over the globe and into several thousands of companies with Selma.
Yes, and for participants who don't know Selma too well yet, you can see the product Selma chose for you after you registered and got your plan by clicking on your investments, and then you have a little toggle where you click on advanced, and there you see all the products that are chosen in your mix.
Yes, I think we're already at an hour 5, so I think people might have other plans, as we saw in the poll for tonight. But as Karina shared in the beginning, there is like a lot of questions that are super interesting and that remained unanswered. What we're gonna do with them is that we're gonna work on them in a Q&A, and we're gonna share them with you after this webinar, so you're still getting an answer to your question. If it's very personal questions, so about your specific financial situation, then, as I said, also reach out to us and we try to help.
Absolutely. Yeah, and we also going to send out the recording of this webinar, as we mentioned in the beginning, together with the questions we didn't get to answer. We also might consider doing this more often, as we saw so many of you joining, participating, and being involved today. We might also host one in German at some point. The first one we wanted to host in English to keep it as open as possible, but we'll see how we're going to decide on that. And in order to tailor them webinars better to your needs, please do send us feedback. There are different ways of sending feedback. Once we are going to look through the chat in detail, because I think some of you already gave some feedback in there. But also, please do either join the Selma Contributor Facebook group. You can find the links on the website. Or basically, if you're already a contributor, just post your feedback there. But you can also write us in our live chat on the website. We'd like to happily read the feedback there as well. We will also attach a survey, a questionnaire with the email with the recording in case you'd like to submit your feedback anonymously. That's also not a problem for us.
Excellent.
That's it for technical.
Thank you so much for joining and being with us for this last hour. We hope it was insightful for you. As I said, there are a lot of questions and you're going to get more answers on them, and please share your feedback. Thanks so much for joining.
Yes, and for most of you, have a fun pub crawl from the living room to the kitchen. Thank you very much for joining. This was awesome.
Thank you. Bye-bye.
Bye-bye.